Good day to all Inderes TV listeners and viewers. Tecnotree published its second quarter results today, and on this video we will discuss that and some longer-term aspects as well. Today we have as guests CEO Padma Ravichander and CFO Priyesh Ranjan. Welcome.
Thank you, Roni. Good morning.
Thanks, Roni. Good to be here.
All right, so let's start with the results reported today. How was Tecnotree's second quarter?
Well, I'll start. Thank you very much for this opportunity. I really believe that we have shown increased traction in our order backlog, which has grown quite significantly to 73 million, almost 32% growth year on year, which clearly states that our product is being well respected and is serving the purpose of our customers. So our R&D investments that we have been steadily making on the stack, the choice of technology and direction of the stack has been well received in the market. Strong revenue growth is also good news, 13% year on year with the 32 million for the first half is definitely a good sign. However, there have been cost pressures. We did warn about that in Q1, and we need to continue to invest. But the good part of this investment that we are making is multifold. One is it is certainly strengthening the quality of our product and our stack. Second, it is the increase in investment is because of cost pressures due to new deployments to tier one clients. And these clients investment today will return us recurring revenue in the future with these customers and bring stability to our revenue over the next 3 to 5 years. This is really good news for Tecnotree, because if you look at our MTN customer or our Latin America Claro customer, we have a good amount of recurring revenue, which adds stability to our revenue portfolio. And finally, I think it's also because we are entering new markets, it's improving the quality of features and capability of our digital stack to deliver to many customers across the world globally. And telecom industry being an essential service, nobody can live today without the internet and data. So I think we are in a good place.
Sounds good. Let's move on to some broader macro themes. Historically, a strong dollar and high inflation hasn't been that good for new investments for economies in developing countries. Have you seen any uncertainties in your customer base caused by these macro issues?
Yeah, see, inflation is a global phenomenon and nobody is immune to it. So is Tecnotree. So I'll not deny that. That's first. We would like the currency not to have such wide swings, because a more stable currency gives us better predictability of our business and our customers' business. But if you look at a broader sense at a macro level, the inflation as well as a talk of a slowdown has caused a lot of customers to think from CapEx to OpEx. But telecommunication is an essential service. So it's very difficult for our customers to make that determination of going from CapEx to OpEx that quickly. This is first part. And this case, this is very well reflected in our order backlog growth from last year. That's first point. Second point, even our product suite is very well suited in case the customer decides to tilt from CapEx to OpEx, because we have our SaaS in our portfolio, we have Moments, as well as we have FinTech. And these three initiatives in which we have been investing are all transaction-based and are OpEx-related matters for our customers and not so much CapEx. So in theory or in summary, we are prepared in case of such a tilt, but telecommunication being an essential service, that tilt is not as predominantly visible as is seen in other sectors.
All right, makes sense. You stated earlier that you will need additional investments to be able to secure revenues from your large order book. How have your recruitments been going, and have you suffered from personal turnover?
So Tecnotree invests in R&D investments, for the longer term. We build cutting-edge products, state-of-the-art. In many cases, we embrace a lot of new technology. So, search for talent and strong technical talent globally is something that we hold very dear to. And we have people who have a very, very long tenure in the company, both in many of our global centers, including in Tampere and Helsinki. We have employees who have stayed with the company for the longer term, which is good news. And these are some of our top talents. However, if you look at the net increase in workforce, we have increased our net workforce by 13% year on year, which is very good at a time when recruitments were very difficult and attritions were high. We also have an advantage because we hire at multiple development centers, and our development centers are spread globally. And our service centers are also very close to the customers that we serve. So we can recruit talent from multiple markets, which gives us an interesting variety of place to hunt and procure talent from. So we are fortunate that way.
You have stated that a SaaS-based business model for your BSS solutions is one of your key investment areas this year. How are these investments going, and could you tell us in what phase are you currently in your SaaS transformation?
Thank you for that question. Yes, this is a very important strategic direction for the company that we embarked late last year in our strategy session. And I'm very, very fortunate to say that this direction for the company is yielding excellent results. Today, given the scale at which telecommunication is expanding, particularly because of 5G explosions and implementations in various markets, customers are having to look at digital transformation of their current platforms. And then there are definitely inflationary and cost pressures. And what cloud and SaaS-based models offer is economies of scale to be able to scale the infrastructure, tools, technology, products, licenses on demand, which is a very, very attractive value proposition for many of our customers in emerging markets as well as in global markets. The phase we are in is in a product fitment and proof of concept stage of our SaaS deployments. We have a good backlog of interested customers who are engaged with us, but we have significant customers in Canada and in Asia Pac, a market which is really exploding in the cloud technologies, embracing our products, early adoption of our SaaS products already. So we have a strong pipe. We are yielding positively to the requests that are coming from different markets and seeing high traction in Canada, Europe, and APAC. And we're still continuing to invest.
Sounds promising. Then let's move on to the rest of the year. This is the first time Tecnotree is giving guidance in many years. What prompted the decision to give guidance now? Could you elaborate more on H2 based on your guidance?
Well, thank you, Ronnie. I think you're absolutely right. This is the first time in a long time, in fact, as long as I've been in the company, that we are feeling confident about giving forward-looking guidance. The company has come out of a lot of tough situations. It has shown its tenacity and it has stabilized over the last several quarters in terms of growth and expectations and meeting customer satisfaction levels, etc. So we felt this was a good time for us to give guidance because we do have a good order backlog for our new products and technologies globally. Also, the directions we have taken with Moments, FinTech, and with SaaS are being extremely well received in the market. We've already seen a good attraction for our digital wallet, Diva, in the market. We've bagged a few new orders. Moments has already been implemented in Africa, and there's a lot of good order pipe and order backlog. And as I already spoke about SaaS and our cloud offering, there's good uptake in Europe, APAC, and Canada. So I believe we are from a business perspective, we are in a good position. And if you look at the quality of the order backlog, these are with reputed, as Priyesh said, long tier one customers with deep pockets and deep penetration in the market. So we believe that as we fulfill these orders, we will create a platform for very good DevOps and managed services type recurring revenue capability with these customers, which would strengthen our revenue position going forward, and also our receivables positions going forward. So if Priyesh, maybe you want to add a little bit.
Yes, Padma, you're absolutely right. In addition to what you said, I mean, we have decided to make investments in our record high order book position, and mainly with new customers. These are all tier 1 customers. And the benefit of making this investment today is that we will win new opcos under those tier 1 customers. That is first. And with each of those opcos, we are expecting to have a long-term recurring revenue relationship, just the way we have had with MTN and Claro for more than 20 years. So in order to do that, we have to come true on their expectations. And in order to achieve that, we have to make some investments today. That is first. And that we have also taken a conscious decision of making investments in the 3 new initiatives: SaaS, Moments, and FinTech. So these are where we are deploying our new cash as investments. And that is why you will see that in the second half of H2, we will not grow the cash as much as we did in this, but those investments we are fairly certain will bear fruits for us in the next in medium to long term.
All right. Thank you for all your answers, and I wish you the best rest of the year.
Thank you, Roni.